From my vantage point, Brian Cornell's exactly right. I mean, this is a very, very solid consumer spending environment. And I think, look, that's on the heels of, not surprising, solid jobs growth. Wages are still probably not where they should be at this point in the economic cycle, but they're better. And let's not discount weather. You know, it's cooler here too. I mean, that helps too, and we'll see how that persists. But I think the overall spending environment is very, very, very solid. Toys R Us and Sears, so the issues that those two companies are a benefit for companies like Target, maybe Walmart. But what I've seen historically too, and I temper my enthusiasm a lot, is because when you have these big events, you know, like in the case of a Toys R Us, a liquidation, it creates a feeding frenzy out there. Mm-hmm. You know, and we saw that, you know, years ago with Circuit City and Best Buy, that Best Buy was much better at taking market share from Circuit City when Circuit City was slowly or gradually bleeding it out. When Circuit City went bankrupt and liquidated, this feeding frenzy formed. And so you had Best Buy, Walmart, Amazon, a bunch of other companies all jumping in to get that. So I do wonder a bit if we're going to see that in the toy category here. You know, just because there's so many companies going after this event.
Right. We think it's going to be a big potential win, but it might not be because there are so many players who are trying to catch the same fish.
Yeah, and they're all going after it so aggressively in such a short amount of time. So like Target was talking about, I know Walmart, I don't necessarily cover Walmart, my colleague at Oppenheimer does. We've talked about this, and Walmart's making a big push in the toy category. I know there's plenty of other smaller companies out there doing the same thing.
Let's get back to this bigger issue about whether the retailers, not just Target, but all of these retailers who have said they're going to be hiring lots and lots of people, are going to be able to find those workers without paying up when you've got Amazon raising its minimum wage to $15. What happens?
Look, I mean, the numbers Courtney gave, I think, were interesting with Target. You know, they're looking to hire 120,000. They have 100,000 applications. So, I think what most likely will happen here is, you know, these companies do have flexibility in adjusting the labor model in the stores. So if they can't get everyone they need, they'll adjust. It's not like they're not going to have people in the stores.
Right. They just have people working longer hours. Right. But you got to pay overtime for that too, if you end up doing that, and that's a potentially expensive proposition. Gabriela, are these companies prepared to be dealing with this, and is the retail environment so good, the consumer environment so good, that it will overshadow any of those concerns?
Becky, this to me is such a good example of some of those late cycle pressures that we're starting to see in the economy. Demand might be very, very solid. We agree the consumer has so much going for it at this moment in time, but you're running out of the supply, right? You're running out of available workers. Maybe one of the solutions is to pay existing workers more, but maybe another solution is you get some economic output that's just postponed. And I think that's part of our expectation for next year.
Economic output that's postponed, people who don't actually make the purchase because...
Exactly, or decisions, investment decisions, hiring decisions that are just not done. And that's our expectation for next year, is that growth does eventually slow down as a result of these supply side pressures to something that's closer to really what we can do in the long term, which is closer to 2%.
Brian, what do you think about Home Depot and Lowe's? There have been a lot of questions asked about those two particular home retailers because of all the concerns we've seen in people not buying new homes, the slack that we've seen in that part of the industry. I've seen a couple of downgrades, people saying, analysts saying, look out, that's going to affect this. But then the counter argument to that is that if people stay in their homes, they're going to make sure they fix them up.
Mm-hmm. Look, so I have buys or outperforms on both names. I talk about them a lot in your shows. We're watching this closely. I mean, clearly right now, the market is taking the view that Home Depot, at least for the last week or so, they're taking the view that Home Depot and Lowe's are in the crosshairs of a potentially weaker housing environment. I'm not too sure at this point. You know, Home Depot and Lowe's are very different than other housing plays, whether it be the home builders or some of the manufacturers, in that, like you said, a big chunk, and we don't know exactly how much it is, but say a big chunk of Home Depot and Lowe's business is simply people maintaining their homes. Mm-hmm. And as I've said a lot, you know, what really drives that, I mean, the age of homes, overall economic environment, the overall economic environment which we've established is good, but also home price appreciation, which again, a lot of noise out there right now, but by most all measures, home prices continue to appreciate. And
right,
I think
well, or I might want to upgrade and get a bigger house, but that means I'm going to have to go from a 3.5% mortgage to a 5% mortgage. And instead of doing that, maybe I just fix up the home I'm in.
That's right, and it encourages, or in some cases forces people to stay in that existing home. And so generally speaking, that's a positive for Home Depot and Lowe's. Look, in the economic downturn, we saw this dynamic where obviously home sales weakened significantly, but home prices also collapsed significantly. That was bad for Home Depot and Lowe's, clearly. You know, we're not anywhere near that. I mean, the dynamic's completely different at this point.